Is the train making all kind of noise? It's not really a complete train. It's just like a couple of cars. What's going on, guys? Welcome back to the channel. Welcome back to another one. Ron Yates here. So hanging out here, beautiful day, enjoying the weather, having a little bit of lunch out here. If you're stopping by the channel for the first time, please consider subscribing to the channel. And while you guys are at it, go ahead and smash that like button. I really would appreciate that. So guys, I got a comment not too long ago. Just gonna read this comment from my phone. And it says here, what's your opinion on companies like Wealthfront offering a 4.3% APY savings account insured $2 million through the FDIC? Just curious to know what you got to say about them and similar companies. So guys, I definitely want to cover this one because you guys are, this is why I love the comments. You guys always bring me something that that is new to me. And this is actually new to me because I wasn't even aware that there were, that the company called Wealthfront offered bank accounts, money market accounts that are insured beyond the $250,000 traditional FDIC coverage. But on this particular one, I'm actually hanging out on their website right now, and I'm just taking a look at it, and it confirms that Wealthfront is an automated investment service, or more simply put, it's a robo-advisor, and they were founded back in 2008. And what's interesting is that they were founded during the time when the most recent Great Recession had taken place. So this organization, this banking institution, this financial institution was started during the last great horrible financial time, and they're still around. So I wonder if that makes a pretty good argument for the stability of this particular institution. Maybe not. But so anyways, it says here that they were founded back in 2008. The company has become one of the most viable platforms for robo-advisor space, with more than $27 billion in assets under management. Now, in addition to investment services, Wealthfront offers a high-yield cash account and lines of credit. Now, this is really good to know. I may have to go over and take a look at Wealthfront because I don't have an account with them at this time, but maybe I will. But it goes on to say here that Wealthfront does not charge any fees for account maintenance, and it offers up to $5 million in FDIC insurance for individual cash accounts. But Wealthfront does not operate any physical branches, nor does it offer any check writing privileges. So basically, there's no banks, there's no physical branches that you could go into if you set up an account with Wealthfront. But what's interesting, though, is that they're offering up to $5 million in FDIC insurance coverages for these individual cash accounts. So it makes you wonder, if they're able to offer this $5 million, I wonder if this is, something that more and more banks are going to start doing to increase the confidence that account holders have within the banks, within the banking system. So this is going to be real interesting to monitor going forward. Let me know your thoughts on this, guys. But basically, they've got unlimited fee-free withdrawals. They got very competitive APYs with no balance requirements either. No monthly maintenance fees. So this is actually something to check out. I may have to. I'm not playing. I'm gonna have to check this one out. And what's also really attractive is that Wealthfront's cash accounts, they offer. It's an alternative to traditional savings and checking accounts, and this account earns 4.3% APY. It only requires $1 to open up the account. I feel like I'm missing out on some money. I should be promoting this company because I'm personally really interested in these benefits. So this is pretty dope. So so far, this looks like it's gonna have to get a thumbs up for me. I'm gonna do some more additional investigative research, but so far so good on this one. Let's see. So the next question that I got is, let me see. He said, there's another one. Thank you for your video. I appreciate the information and insights. Thank you for sharing your personal investment experience and side hustle experiences. I've only used Chase and Bank of America as they are the top banks and national. However, recently used Marcus and Wealthfront because of the high yield savings account. So it looks like more and more people taking a look at this Wealthfront option. Now, you guys know just yesterday, Fed Chair Jerome Powell announced another 25 basis point rate hike. And so the markets have responded. By selling off a little bit. And this is typical. You really can't tell what the market's going to do in the short term based on what the Fed has done in terms of raising interest rates or even cutting them. So this could honestly be interpreted a number of different ways. So if the Fed raise interest rates another 0.25%, then that means a couple of things. Could mean that the Fed is realizing, hey, especially with the comments that came after the 25 basis point increase, Jerome Powell makes it seem like this might be the last rate hike for a very long time. Now, we have heard from the Fed in previous meetings that even if they stopped, they're not looking to cut interest rates, and they're looking to hold interest rates where they are for a prolonged, extended period of time. So let's just say that they stop here. Is the Fed saying, hey, we realize that the banking system is fragile and we need to stop before we make it worse? Is the Fed saying, hey, we've done enough to curb inflation and now we're good on kind of like not raising interest rates any further? Because here's something that if you think about, right? If you think about it, you got CPI inflation that's coming out. And I think the highest it was somewhere around 9%. But they look at this rating, they look at this report on an annual basis. So let's just say inflation stayed at 9%, right? If it stayed at 9%, let's just say inflation was 9% and prices did not rise at all from that point. 0%, increases in prices on goods, consumer goods and whatnot. 1 year from then, you would have 0% inflation because it's always compared to the previous year. So your prices aren't going down. It's merely how much are they increasing on a regular basis. And so this is why, there's such a heavy emphasis. This is why I put such a heavy emphasis on always increasing your income, always investing, always compounding your money, because there's only so much you can cut in terms of expenses. But there is no cap. There's no limit on how much income you can earn. And if you're not constantly increasing your income, especially with the Fed's target rate of 2%, like they don't want 0% inflation, but they also don't want 9-10% inflation. So for a fact that things will always be more expensive because the Fed is in control. So if things are always more expensive, you have to always be earning more money. It's just basic math. You can, imagine you cut everything down to bare bones, as low as they can go. But still, every year, everything gets more and more expensive. At some point in time, you would run out of money and you'd be forced out of your house and you'd be homeless. So increasing your earning capacity is just always going to be the solution. So anyway, I just want to share this with you guys. Drop me some comments, drop me some thoughts down below. Let me know what you guys are thinking. Let me know what you guys are investing in and how you guys are doing in this year so far. Be safe, you guys, and I'll catch you guys on the next one.